Welcome! In this video, can Zbcn coin increase 850% and start a rally? We will analyze it. Don't forget to subscribe and like. And please watch to the end to understand.
First of all, the rising curve structure that appears on a financial chart is actually considered a very critical element in terms of technical analysis, because this structure indicates that the price is moving upward in a steady and consistent manner, meaning the buyers are exerting strong pressure in the market. A rising curve is not just a simple trend line. It also emerges when the price consistently forms higher lows and pushes its highs higher as well. Therefore, it is very important for the price to maintain and not break this curve, because once it breaks, the momentum of the uptrend may weaken and create uncertainty in investors' expectations. In other words, this curve is like a safety zone for investors. The longer the price manages to stay above it, the stronger the likelihood that the uptrend will continue. That's why technical analysts attach great importance to these curves, and in every scenario where the price does not break the curve, positive expectations for a continued rally in the market gain strength. Emphasizing that such a curve should not be broken also has an important psychological impact on market participants. This is because most investors, when observing such rising curves or trend lines on charts, tend to shape their trading decisions accordingly. For example, even if the price approaches the curve but fails to break it downward and instead manages to bounce back up, in the eyes of investors, this curve begins to act like a strong support line. This attracts even more investors to the market, since no one wants to sell easily when a strong support line has not been broken. On the contrary, such situations send investors the message that the uptrend is still alive. This psychological effect causes the price to reinforce itself, meaning that if the curve is not broken, the uptrend can become even stronger thanks to investor confidence. These kinds of curves also provide important clues for understanding the overall market momentum. If the price manages to stay above a rising curve, this actually shows that there's a significant base of buyers in the market and that the strength of sellers is limited. Buyers step in at every dip to push the price back up, keeping the curve intact. Through this mechanism, the price gradually climbs to higher levels. However, if the price were to break this curve, it could signal that the strength of buyers is weakening and the pressure from sellers is starting to increase. Therefore, from a technical perspective, maintaining such a rising curve is considered an essential condition for the trend to progress in a healthy way. Another important factor for investors is risk management, because a rising curve also provides investors with a clear reference point. For example, if an investor has taken a position within this uptrend, as long as the price stays above the curve, they can confidently hold their position. But if the price breaks the curve downward, the investor may recognize this as a warning sign and use a stop-loss level to minimize risk. This is why rising curves play a critical role in investors' decision-making processes. Not breaking the curve means investors can safely hold their positions, which in turn contributes to the continuation of the uptrend in the market. Especially in long-term trends, the value of such rising curves increases even further. Because even though the market may show volatile and choppy movements in the short term, as long as it stays above these curves in the long run, it indicates that the overall direction remains upward. For long-term investors, what matters is not short-term corrections, but whether the price stays above the curve. Therefore, the emphasis that the rising curve must not be broken is not only critical for the immediate price action, but also for the continuity of the trend in the bigger picture. The fact that the price does not break such a curve also allows potential chart patterns to function more effectively. For example, a price movement continuing along a rising curve supports the formation of strong reversal or continuation patterns, such as the cup and handle or the inverse head and shoulders. These patterns signal further strengthening of the uptrend for investors. If the curve is broken, however, the likelihood of these patterns failing increases, which undermines market confidence. Thus, maintaining the curve is important not only for protecting the trend, but also for allowing strong patterns to form on the chart. From a psychological perspective, when investors see that the price continues to hold above the rising curve, they think the lows are getting higher, which means the trend is healthy. This perception makes it easier for market participants to collectively buy because higher lows show that demand is steadily increasing while supply remains weak in comparison. This strengthens expectations that the price could rise to higher levels in the future. Therefore, the fact that the price does not break the curve provides a strong signal of continuation, not only technically, but also psychologically. In addition, such curves also make market volatility easier to interpret. Even though the price may experience pullbacks from time to time, as long as the curve is maintained, these pullbacks are seen as healthy corrections and part of the natural trend. But once the curve is broken, these corrections risk turning into signs of a potential trend reversal. In this sense, the curve acts as a guide that helps us understand both the direction of the price and whether the corrections are healthy or not. Finally, it must be emphasized that saying a rising curve must not be broken also sets a strong expectation about the future of the trend. If the price continues to protect the curve, a long-lasting uptrend may develop in the market. This allows investors to look ahead with greater confidence. In other words, maintaining the curve is critical not only for the current price action, but also for future price expectations. That is why in technical analysis, protecting the structure of a rising curve is one of the most fundamental conditions for a trend to advance in a healthy way. Not breaking this curve means that the strength of the trend continues, investor confidence remains intact, and buying pressure in the market is still strong. For this reason, rising curves are seen as one of the most important building blocks of charts and serve as a kind of roadmap for investors. But we can't make decisions based on the curve alone, so let's take a look at other metrics as well. Stay tuned.
The existence of a resistance level above the price always carries great importance in technical analysis because this point indicates an area where the market previously struggled to advance, where buyers lacked sufficient strength, and where sellers appeared heavily. A resistance level is essentially a psychological barrier in the market, a wall formed in the minds of investors. Every time the price reaches this level, many prefer to take profits or open new sell orders, which causes the price to turn downward again. However, in a long-term uptrend, breaking these resistances is only a matter of time because the continuously increasing demand forces the price to overcome these barriers. When resistance is broken, the psychological balance of the market changes. Where sellers were once dominant, now buyers prevail. For this reason, the price needs to break this resistance level. Otherwise, a serious obstacle to the uptrend arises, and the market may waste time moving sideways or pulling back. The breaking of resistance is not simply the price surpassing a line. Behind it lies significant market psychology and volume support. If buying volume starts to increase as the price approaches the resistance level, it indicates that the breakout will be strong. Especially breakouts with high volume show that the price is not just making a temporary move upward, but is within a lasting trend continuation. This is why the resistance level must be surpassed. Only then is the obstacle removed, and the market can gain new momentum. Once resistance is broken, many investors who had been waiting step into buy because market confidence increases and the belief strengthens that the price can reach new highs. This creates a chain reaction of psychological effects. Once resistance is breached, a wave of relief spreads through the market. Buyers enter enthusiastically and sellers retreat. Furthermore, from a technical analysis perspective, the breaking of resistance is considered a very strong signal confirming the continuation of the trend. If the price surpasses the resistance level, it shows that the uptrend is solid and that the bulls have control of the market. This is why, until resistance is broken, the upward movement of the price remains limited. For example, if the price repeatedly reaches the same level and turns back, this signals the presence of a strong barrier. However, with each attempt, the power of the sellers decreases, and eventually the breakout occurs. For this breakout to be valid, the price must make sustained closes above the resistance. Not just a brief spike, but clear and high volume closes confirm the breakout. As a result, a new wave of upward movement begins in the market. Another factor emphasizing the need for the price to break resistance is investor confidence. Because in the markets, not only technicals, but also emotions play a major role. When investors continuously encounter selling pressure at the same point, they hesitate. However, once the breakout happens, this hesitation disappears, and the market enters a phase of relief. This environment of confidence accelerates the entry of new investors. Especially long-term investors tend to make new purchases after a resistance is broken, contributing to the continuation of the uptrend. This leads the price into a much stronger and more sustainable upward trend. Thus, a resistance breakout is not only a technical event, but also represents the emotional transformation of the market. As long as resistance is not broken, the upward movement of the price remains under constant pressure. This prevents the uptrend from progressing in a healthy manner. Each pullback discourages buyers and strengthens sellers. Therefore, breaking the resistance level is essential for the continuation of the uptrend. If the breakout occurs, new targets are set in the market, and the price gradually moves toward them. For example, after resistance is broken, the previous high point or Fibonacci levels can be taken as new targets. This allows investors to act with more confidence in the market. In addition, it is often observed that after breaking resistance, the price retests that area as support. This is a key concept in technical analysis known as resistance turns support. The presence of a steep ascending channel on a market chart can be considered one of the strongest signs that a bullish trend is continuing. This is because ascending channel formations indicate that the price is consistently making higher lows and higher highs, meaning buyers are stronger than sellers in the market. Especially if this channel has a steep structure, it proves that the price is inclined to move upward much more aggressively. In such a case, the possibility of the price reaching the upper band of the ascending channel and achieving an extraordinary 850% increase becomes highly remarkable and exciting for investors. This is because, in technical analysis, channels are always powerful tools used to understand the direction, momentum, and potential targets of price action, and as long as the price remains within this channel, the uptrend is expected to continue. Such steep ascending channels generally indicate that the market is in a strong bull phase, that investor psychology has shifted entirely toward optimism, and the demand is continuously increasing. While the upper band of the ascending channel represents the highest potential level the price may reach, the lower band represents the area where the price may find support during this upward movement. Therefore, the potential 850% increase upon reaching the upper band serves as both a technical and psychological catalyst. Investors following this channel often see the move toward the upper band as a natural process and continue buying until the price reaches it. An 850% increase is particularly possible in the cryptocurrency markets. These markets are highly volatile, and major rallies can occur even within short periods during strong trends. In this context, the path toward the upper band of the ascending channel represents not only a mathematical price target, but also the motivation of buyers in the market. When an investor sees the upper band on the chart, they often view it as a natural target, and this expectation collectively increases buying pressure. This, in turn, helps the price move upward faster and more strongly. The formation of such a steep channel usually occurs after a major accumulation phase. That is, the price consolidates sideways for a long time, then breaks out of this accumulation zone with strong buying pressure and begins advancing within a steep channel. In this process, the upper band of the ascending channel serves not only as a price target, but also as a psychological barrier. Many investors may see this as a profit-taking level. However, simply knowing that the price has the potential to rise that high is enough for market participants to sustain the uptrend for an extended period. The steepness of the ascending channel also shows that momentum is very strong. While flatter, narrow-angled channels usually reflect slower and more measured price action, steep channels highlight much stronger and more aggressive buying pressure. This indicates that the price may experience large gains in a short time. If the price continues to move within this steep channel, the potential 850% increase becomes a logical expectation from a technical analysis perspective. This potential rise is calculated based on the structure, slope, and width of the channel. Reaching the upper band of a steep ascending channel represents not only a price level, but also a turning point in investor psychology. When such targets are reached, market participants' enthusiasm often peaks. This can further accelerate the price movement. Especially in cryptocurrencies, the collective expectations formed around these kinds of chart patterns can drive the price toward targets much faster. In other words, the potential 850% increase is not just a figure drawn on a chart, but also a scenario that triggers collective psychology. During such an uptrend, the most important factor for investors to monitor is whether the price continues to hold above the lower band of the channel. The ascending channel formation remains valid as long as the price touches the lower band and bounces back upward. If the price remains within the channel without breaking below the lower band, the likelihood of reaching the upper band increases. Therefore, even a target as high as 850% remains within reach. However, if the price breaks the lower band, this bullish scenario may be invalidated. Still, as long as the channel structure remains intact, the price can continue rising toward the upper band. The steepness of the channel carries both opportunities and risks for investors. A very steep uptrend suggests not only rapid gains, but also the possibility of sudden corrections.
However, from a technical standpoint, the uptrend is not considered complete until the price reaches the upper band of the channel. For this reason, investors must remain patient and closely monitor the channel structure. The presence of a potential 850% increase strongly motivates investors, and this motivation often drives the price toward the target. Moreover, if such an ascending channel structure is supported by fundamental factors, the likelihood of the price reaching the upper band becomes much stronger. In other words, if there is positive news flow, strong demand, and growing investor interest, the 850% increase projected by the technical structure may occur much quicker. When technical and fundamental factors align in the market, trends often become longer-lasting and stronger. In conclusion, the existence of a steep ascending channel and the potential 850% increase, if the price reaches its upper band, indicate a very favorable outlook from a technical analysis perspective. This structure shows that a strong bull trend is ongoing, buyers are dominant, and the price is advancing toward higher targets. As long as the price remains within this channel, investor expectations will stay bullish. The presence of such potential serves as both a technical and psychological factor supporting the uptrend, and the extraordinary rally that could occur upon reaching the upper band would remain in memory as a historic bull scenario.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profits. See you soon.